Hey everyone, and welcome to another deep dive. Today we're diving into Bitcoin and crypto. We all know it's exciting, but it's also smart to be a little cautious. That's where this video comes in. Bitcoin. Everyone is too bullish on crypto. This always happens next. It cuts through all the hype and connects some really interesting stuff like crypto and real estate cycles. So get ready, because this one's going to change how you think about investing no matter what you're into. Okay, so the video starts with this idea of being too bullish. Like when everyone's overly optimistic about something, what's interesting is this isn't just about crypto. We've seen this too bullish thing again and again, like back in the late 90s with the dot-com bubble.
Oh, yeah.
Everyone thought internet stocks were going to make them rich overnight, but then the bubble burst and, well,
Yeah, a lot of people learn some tough lessons about how markets really work.
yeah, that's a big one. So when the video talks about a blow-off top, what exactly does that mean?
Well, imagine a rocket taking off into space, right? It shoots up super fast, but eventually it runs out of fuel.
Yeah.
And then what happens? It comes crashing back down to Earth. That's basically what a blow-off top is. It's when you have this unsustainable growth and then suddenly a rapid decline.
And how can we tell if we're getting close to that point? The video mentions something called the Fear and Greed Index.
Right, the Fear and Greed Index. It's actually really cool. It basically measures how investors are feeling.
Okay.
Like, are they feeling super greedy and taking big risks? Or are they more fearful and pulling back?
Interesting.
And you know what? The video shows how this index has actually predicted major market turns in the past.
So wait, are we saying that a little fear in the market is a good thing?
It's not about wanting fear, but more about understanding that it's a natural part of how markets move. Think of it this way. When everyone's feeling super greedy, it often means prices have gone up way too high, like beyond what makes sense.
Right.
And that sets things up for a potential drop.
I see.
So having a little bit of fear can actually help keep things in check.
That's a really interesting way to look at it. So how can our listeners keep track of this Fear and Greed Index?
Oh, it's actually easier than you'd think. There are several websites that update it every day. They use things like market volatility, how broad the stock market is, and even what people are saying on social media.
Wow, so it's like they're taking the temperature of the market from all these different angles.
Exactly.
That's really cool. Okay, so we've got this too bullish sentiment that could lead to a blow-off top.
Right.
And we've got the Fear and Greed Index as a way to track that sentiment. But where does real estate fit into all of this? The video kept mentioning a connection.
This is where things get really interesting. So the video says that real estate cycles can actually predict bigger swings in the market, and that includes crypto. They talk about this thing called the 18.6-year cycle.
An 18.6-year real estate cycle. That's incredibly specific. What's the deal with that?
Basically, it's this long economic cycle that's driven by things like demographics and how much we spend on infrastructure.
Oh.
Imagine a pendulum swinging back and forth every 18.6 years, and that pendulum affects everything. Housing prices, stock market performance, you name it.
Wow, that's a long cycle to wrap your head around.
Yeah.
So where are we in this 18.6-year cycle right now?
According to the video, we're in something called the winner's curse phase.
Winner's curse. Doesn't sound so great.
It can be a tough phase to navigate. This is usually when prices go through the roof because everyone's rushing to buy.
Right.
So they end up overpaying.
Oh, I
So
see.
it's like being at an auction and you get so caught up in the excitement that you end up bidding way more than you planned. That's the winner's curse in action.
So even if you win by getting that property or investing in the next big crypto, you might actually be setting yourself up for a fall.
Exactly. And what's interesting is the video ties us right back to the whole too bullish thing. When everybody's so focused on the frenzy, they forget to look at the big picture. And that's when they start making decisions based on emotions instead of logic.
Which can be dangerous. So how do you avoid falling into that trap? How do you avoid that winner's curse, especially with something as unpredictable as crypto?
I think the biggest thing is to stay grounded, you know? Don't let your emotions, especially fear or greed, cloud your judgment.
Right.
Do your research. Make sure you really understand what you're putting your money into, and be ready to walk away if the price gets too crazy.
So you're saying it's okay to miss out on something if it means avoiding a bigger problem down the road.
Exactly. Sometimes the best investments are the ones you don't make.
That's really good advice. And speaking of keeping a cool head, the video also talked about how billionaires approach these market cycles. Apparently, they're often the first ones to cash out when everyone else is feeling really bullish. Why is that?
Yeah, it's true. Billionaires tend to play the game a little differently.
Okay, how so?
Well, they have access to the best information, they've got sophisticated tools, and they usually have a much longer-term view of the market than the average person.
That makes sense.
They understand that these cycles are just part of how things work.
Right.
What goes up must come down.
So they're like surfers riding the waves, knowing when to catch the swell and when to paddle back to shore before it crashes.
Exactly. They ride that wave of excitement, but they're always looking for those signs that it's about to peak. And they're ready to lock in their profits and move on to the next thing.
That's a really interesting analogy. But how can the average person adopt that kind of billionaire mindset? I mean, we may not have their resources, but we can definitely learn from their approach, right?
Absolutely. And one of the key takeaways is to always have an exit strategy.
What do you mean?
Don't just buy something and hope it goes up forever. Before you invest, decide at what price you'd be comfortable selling, both to take profits if things go well and to limit your losses if they don't.
So having that predetermined exit strategy helps you stay objective and make more rational decisions.
Exactly. It's about being disciplined, not getting swept up in the hype.
Right. It's easy to get caught up in the excitement, especially when you see other people making money.
And that's how people fall into that winner's curse trap.
They see others buying, so they feel like they have to buy too, even if it means paying too much.
Precisely.
This has been incredibly insightful, but let's get to the million-dollar question. What does the future hold? Did the video actually make any predictions about where things are headed?
It did. And get this, it's based on over 100 years of market data, which is pretty amazing.
Wow, that's a lot of data.
Right. And according to their analysis, we could be looking at a bullish market until at least 2025.
2025, that's right around the corner. So does that mean we're all going to be driving Lambos and buying islands soon?
Well, let's not get ahead of ourselves. It's important to remember that this is just one interpretation of historical data. The market is full of surprises.
Right, of course. It's easy to get excited about predictions, but we have to stay grounded too.
Exactly. The video really stresses that no matter how optimistic things may seem, risk management is key.
So it's about finding that balance between optimism and caution.
Exactly.
Don't let fear control your decisions, but don't let greed control them either.
Now you've got it.
So the main takeaway here is that markets move in cycles. And when everyone's feeling super bullish, it might be a warning sign, not a green light. You know, this deep dive has really got me thinking about the bigger picture. Like, we've talked a lot about these cycles and predictions, but what does it all actually mean in the grand scheme of things? How do we even wrap our heads around the future of markets, not just in a few years, but decades from now?
That's the million-dollar question, isn't it? We can't predict the future, but we can definitely learn from the past.
Right.
Those patterns we've been talking about, the fear and greed, the booms and busts, they've been happening for centuries. And knowing that historical context can be so valuable no matter what's going on in the markets right now.
So it's about becoming a more informed investor, not just following the crowd, but thinking for yourself, doing your research, and being aware of how psychology plays into everything.
Exactly. And I think this video does a great job of highlighting how important that is.
Yeah, for sure.
It's not about blindly following charts or taking someone else's word for it. It's about taking control of your own financial decisions and really understanding what makes the markets tick.
I love that. So as we wrap up this deep dive, what's the one big takeaway you hope our listeners walk away with?
You know, if I had to pick just one thing, it's this. Markets are driven by human behavior.
Okay.
Yeah, algorithms and economic data definitely play a part, but at the end of the day, it's people who are buying and selling.
Right.
And they're driven by their emotions, their biases, and how they see risk.
That's so true.
So understanding that human side of things is just as important as understanding the technical stuff when it comes to investing.
That's a really powerful insight. It's not just about crypto or real estate, right? This applies to any investment decision we make.
Absolutely. We're constantly bombarded with information these days.
Oh, yeah. Tell me about it.
It's so easy to get caught up in the hype, to just follow the crowd, to make decisions based on fear or greed.
For sure.
But what this video reminds us is that knowledge is power.
Love that.
The more we understand about how markets actually work and the psychology behind it, all the better decisions we'll be able to make for our financial futures.
Couldn't agree more. So listeners, what are your thoughts? Has this deep dive changed the way you think about investing? Are you looking at those two bullish headlines a little differently now? We want to hear from you.
And, you know, if you're feeling curious about this whole idea of market cycles, do yourself a favor and dive into the past a bit.
Ooh, I like that.
Look at old charts, research some of the big market bubbles from history, and see if you can spot the patterns.
It's like a detective game for your money.
Exactly. It's all about connecting the dots and remembering that the more informed we are, the better prepared we'll be to ride out whatever the market throws our way.
So well said. And on that note, we'll wrap up this deep dive. Remember, do your own research, think critically, and as always, happy investing.